The most interesting thing is that we have an institution called Kenya Productivity Center, which is a government institution under the Ministry of Labor. The question is it possible to measure that? I mean, it has been done in South Korea, it has been done in China, it has been done in Japan, and these are some of the countries, you know, with the highest labor productivity in the world. The question is, do you think it can be done here in Kenya?
Why not? Why not? You're not reinventing the wheel here. You look at what have they done that has worked, and then you localize it from a local context perspective. We are the Silicon Savannah of the region. We should be able to engage a lot more from a tech perspective and say, okay, what measurement mechanisms can we use to increase productivity? Yeah.
Oh, very good. Kimari, what are your thoughts on these?
It's all about efficiency. And if you even look at the private sector, they do find ways of being able to gauge productivity from their employees. So I do believe that there is a way to do that, to be able to improve efficiency. And it's just you know, coming up with ideas on how to do that. And we can be able to borrow from the Western world.
Ken Ganga, you're the CEO of Scope Market. I mean, Kevin, sorry for that. Kevin, you're the CEO of you know, Scope Markets Kenya. I mean, I want to believe that you have you know, workers,
yes,
who definitely toil under you. How do you measure their productivity?
So a couple of things. We're very clear about the KPIs you set. You're very clear about the job description. And you're very clear about what is expected from an outcome perspective. When you have those three factors, you must be able to measure them. So one of the things that we do is, for every staff, we have a monthly management review and a quarterly performance review, so that you ensure that every time the employee understands what their role is and what is expected of them. And then annually, we conduct an external, what you call an employment engagement survey, where you assess how engaged are employees. Are they doing other things? Are they doing what is expected of them? That's how you measure productivity, but it has to be a continuous approach and deliberate.
And deliberate.
Yeah.
You see, one of the most interesting thing about today's panel is that they all have glasses, except me. I have to put them on, lest I am the odd one out.
You look very dapper that way.
I look dapper, whatever that means. Now, let's talk about what brought us here. This is, you know, Forex trading. Why is it becoming the buzzword of late? Kimari.
I would say because of the opportunities that it presents. When you look at the Forex market, in terms of opportunities, that is the largest market in the world. Talking about more than 5 trillion US
dollars.
Yes, worth of currency exchanging hands every day. So when you look at the kind of opportunities that presents, compared probably to our stock market, which has a daily turnover of about 2 billion shillings, it's about $20 million. So there is more opportunities in a $5.5 trillion market a day. So that is what is bringing more people towards the Forex trading.
Do you share in his sentiment that
100%.
people are allured by, you know, the big $1 trillion?
100%. I think two things. One, why is it becoming a buzzword? People are looking for alternative income streams. And online Forex trading presents an opportunity where, for example, you on your phone, you would be able to have access to global shares, access to trade in Forex, access to trade in commodities like oil, access to trade in metals like gold from the palm of your hand. So that interest and that ability and ease of entering into a trade and buying and selling, I think is a very important thing. The second part that I think is a big buzzword is, why it's being a big buzzword is, we are a digital economy. Everything is gone digital. We have outputs, we have ability to get employees on board without having, excuse me, without having to engage in many productive aspects where you're saying, for example, I only need to sign up with $20 on my platform. That is 2,000 shillings. So the ease of entry is a big plus for Forex trading.
You know, when you talk about, you know, 5 trillion plus, you know, US dollars, I mean, it sounds so huge and lucrative. for anybody, but we know for sure that Forex trading is not for the ordinary man. I mean, it is a very sophisticated business, whereby you have to know, various currencies and their movements and what actually moves the market. The question is, when the Capital Markets Authority talks about 50,000 people plus, engaged in this business, are they all making profit, Kimari?
Well, I would say that when it comes to speculative investments, such as Forex trading, you do expect that managing of risk is quite important. And if you look at a large number, if you look at the statistics even globally, when it comes to financial markets, you tend to have a high failure rate. And the reason for this is because most people do not invest the time in being able to study. Just that gaining the knowledge and gaining the skills before they get into it. So that is quite important. And as a school, Nairobi School of Forex, we've seen quite a huge difference when it comes to people who come for classes. They're able to learn how to trade in Forex versus what they were doing before they came to class. We can be able to see that change in profitability. So it's quite important for people to know the nature of the business, the risks that are there, and just basically how to come up with a good strategy.
We will be coming back, to try and understand what are you teaching at the School of Forex.
Yeah.
But Kevin, tell me this. I mean, we've had cases, of people burning their fingers, and trying to enter. And burning their fingers, is a technical term of trying to say that you made losses or you burnt your money. Yeah, it's not a big thing. But Kevin, having been in this business.
Yep.
Seeing how people are rushing into this, do you think people are going into it without, first of all, understanding the risks involved? Because where there are big opportunities, there are also big risks.
Thank you. I think, and this is one of the core factors for Scope Markets, what we've done is we've invested in a fully fledged training workshop where before you come on board, we are required to do a couple of things. One, you need to undergo an appropriateness test to understand your level of understanding of the Forex. So are you an intermediate, or are you a beginner, or are you an advanced? If you're a beginner, we offer you something called a demo account. And we invite you, we have training workshops every day from Tuesday to Saturday, twice a day, where we are committed to instilling knowledge and discipline around understanding their risks, there's upside, there's money management, and these are the things that we are continuously speaking to our audience about. It is not all about just coming for the fact that you think you're going to make $1 million overnight. No. As any entrepreneur, you must invest in your craft. Whether you're selling mangoes, whether you're a trader, 3% of entrepreneurial businesses rarely, only 3% succeed 5 years. Now, it's the same thing with any Forex activity. You have to be able to be two things. Number one, you must take time to understand the markets. You must research, and as Gilbert has mentioned, if you're not patient enough, the probability of losses increase. And what we are doing at Scope Markets is ensuring that clients understand that we want to educate you, we want to partner with you in this journey so that your chances of success increase.
Tell me things. I mean, you're talking about, having, workshops, 2 times a day.
Yeah.
Who is eligible for the workshop?
Okay.
Where are the workshops held? And before now, I can consider myself a swave trader.
Yeah.
How long will that take?
Okay. So the first question, we are located at Westside Towers in Westlands on the 4th floor. We have, training is eligible for anyone, anybody across the country if you're able. We are going to run out partnerships, especially with also Nairobi School of Forex, where we will have accredited trainers across the country. We are working with the counties where we can get county partnership programs where we can educate people. But for Nairobi, we are located in Westside Towers, 4th floor. All you need to do is go to our website. We have a training website called scopehub.co.ke where you can get to register. It is free, 100% free, no charge. We have a schedule all the way through to the end of December.
Yep.
So you can just plan your day however you want. Whether if you're employed, for example, like yourself, you can come in at 6 p.m.
6 p.m.
Yes, and you'll have a trainer there. We have 2-hour slots. For every session is 2-hour slots. And we take you through the journey. Now, to answer your last question, how long does it take you to become? What we typically do is we have a training program for 2 weeks for the beginner. So you have a 2-week training program as a beginner. Then we essentially graduate you to intermediate, which is another 2 weeks. So within a month, you should be able to understand the basics. And then we have something called a mentorship program, where every month we have experienced traders like Gilbert or other experienced traders who come in and mentor you and show you, these are the things that I learned, these are the pitfalls that I avoided over the years, and then we continuously reiterate that journey. That's how we work on our business.
That's how you work.
Yes.
I'll be coming back to you and trying to find out. I mean, you're definitely in business. Yours is not a charity organization, right?
Yes.
And neither is it a not-for-profit organization. I'll be coming back to you to find out, how do you make your profits, out of training people.
Yep.
But I want to come back to you, Kimari. Forex trading business in Kenya, has been with us for the last 13 years. That's when, it started picking pace.
Yes.
But all of a sudden, in the last 3 years, that's when it is gaining a lot of currency, and a lot of people, are engaging in it. And you walk around town, you find so many people calling themselves trainers. How do you then differentiate between people who are genuinely in this business and people who are just out there to con you?
True, that's a good question. And I think over that 13-year period, I think we've seen a lot of people probably engage in scams, conning people out there. But maybe just to answer the first question, why it has gained a lot of traction over the last 3 years, that is, I would narrow that down to the laws that came in place from around 2017. Prior to that, most people thought that Forex trading was illegal because there wasn't quite any rules or any clear definition of what online Forex trading was. We didn't also see that in the Central Bank Act defining what online Forex trading was. So prior to that, most people kind of thought that it was an illegal practice, or they didn't quite know what it was all about. But after the laws, that made it very clear that online Forex trading is legal and you can be able to do it. And that's when we saw more and more people decide to get into the business. Now, with regards to being able to tell a genuine trader or trainer from a fraud, it all depends again on the skill that person has, and also being able to do a little bit of research. Most people just jump into business even without thinking twice. You just come across someone, they're very savvy, they're able to convince you something, and you're not able to have enough time to even decide on whether that is genuine or not. So I think a good way of being able to distinguish between people who are fake and people who are genuine, just look at the people who are there in the industry, the people who are recognized by those regulated entities. And we have CMA as the regulator, we have Scope Markets as a legal and registered Forex broker in Kenya. You also have Nairobi School of Forex, whom we also partner with, all the regulated and registered entities in Kenya. So just look for the people out there who are working with regulated entities. So that is the best way of being able to tell someone who's genuine and someone who's not.
If I can add, one of the things we are working with the regulator is a curriculum accreditation program where you can become an accredited trainer both at the TVET and the NITA authority and the CMA. That would give some sort of sanity towards, because everybody can just go download training material. I make it look as Kevin Nganga training company, and I come and I tell you, give me 2,000 shillings, I'll train you. I've never traded in my life. I've never done anything. So what we are trying to encourage people is to look for people who have invested in infrastructure, such as Nairobi School of Forex, that are committed and have a continuous training program. They're not just out to get your money and tell you, okay, this is what you do, this is what you do, and in 2 weeks you're done. You get. So one of the things we're doing is to try and see how can we ensure we have what we call accredited training, accredited trainers with a clear approved curriculum, so that whether it is an approving authority that reviews the curriculum and says these are the recommended curriculum outcomes, so that a trainer now has to achieve those objectives when training you. So those are some of the things that we are working with the regulator to ensure that there is some sort of accreditation.
I mean, you are talking about, having 2 trainings, scheduled per day.
Yes.
And I was lost. I mean, you do these trainings in your office or in hotels?
No, in the office.
In the office.
So we have.
Do you buy them coffee and tea?
Yes, and small snacks.
And small snacks.
Yes, we do.
Lord Jesus.
Yes.
So the question is, how do you pay your bills? Do you charge them first of all?
No, we don't charge them. So
what's the catch?
there is no catch. We actually committed to growing what I call a digital workforce. I'll answer your question of how we pay the bills, but I just want to explain why we do this for free. 2 things. One, we are not here to just take your money from your pocket. We are actually here to try and grow the speculative investing market in Kenya. We want to increase your probability of being successful. That's 1. 2, how do I make money? As with any stockbroker, a traditional stockbroker, we earn commissions on 2 ways. We earn our income in 2 ways. When you trade, we earn a small commission. When you enter a trade, we enjoy part of what you call the spread. So we encourage activity on trading. So we are just like a traditional broker. So if you go and buy a Safaricom share today, the broker charges you a commission. That's how I pay my bills.
So the more the traders, the more the likelihood that you are going to make more commissions. Beautiful. Tell me this, I mean, when you go to social media sites, I mean, you see young people, looking flashy, in expensive suits and phones, and they will go ahead and wax lyrics, about how they have made millions, in less than 1 year, trading in stocks. And so this is becoming pretty much, like a magnet, for want to be rich quickly. Are they genuine, by the way? First of all, is it possible to become a millionaire trading in stocks, in a couple of months?
What I'd say is that it is possible, but
it is possible.
When you look at the probabilities,
do you know somebody who has become a millionaire by, in a couple of months, trading in stocks?
Well, I'd say that
in Forex.
Not a couple of months. It does take some time.
Like so sometimes for you is like how
I would
long?
say a few years for
you
to be able.
Years.
Yes, for you to be able to do that. But what happens is that the market, the possibilities are limitless, and that's why I wouldn't want to say that it's impossible.
It is possible.
It is possible,
and
but
still it's maybe impossible.
What I would say is that it's quite difficult for you to be able to do that within a short period of time. Within a short period of time.
Yes. Nganga, have you made it?
Yes.
But you have made it?
No, not myself. I would say yes. We have seen. I have seen clients on my portfolio on our platform actually grow $1,000 to maybe that's 100,000 shillings to about 3 million shillings in about 3 months. So it is there.
3 months.
Yes, in about 3 months.
What a phenomenal growth.
Yes, but I would want to qualify that. It is possible, but it comes with attendant risks. So it is possible that you can get to 3 million, but it is also possible that you can lose the entire 100,000. And that's why...
And even the entire 3 million.
And you can get to 3 million and lose it all again. And that's why it's important to... And in our workshops, it's a continuous engagement. It is not that I will teach you for a month and I let you go. I have continuous mentorship programs so that you understand that this is something sustainable. We have clients on our platform who live purely on Forex. It pays the bills, it pays the rent, it allows them to entertain themselves, they're not flashy, and it is a source of income and it is a source of livelihood continuously. They don't make supernormal profits, but they make enough to keep themselves comfortable. They make enough to improve their standard of living. And we see, I'll give you an example. We have a man and a wife on our platform.
A husband and a wife.
Husband and a wife. And the husband takes short-term speculative trades.
What is that?
Where he buys and sells within the day. So enters and buys and sells. And the wife trades long term. So she takes trades that give returns over a long period of
The
time.
husband is more risk averse.
No, the husband is more risk. She's less risk.
She's
yes.
she's less
and
risk averse.
it's an amazing story where they hosted me for lunch at their house, and they've got a trading desk. The wife
In the house?
Yes. And at lunchtime they have lunch, and they come back and they discuss the markets. More so, they like to trade the New York markets, which starts at about 4 p.m. So in the day, they're doing other things. They come in at lunchtime, they discuss strategy. They say, okay, this is what we want to do.
This is a husband and a wife.
Yes. This is our
They
objective.
discuss strategy.
They discuss strategy. This is our
In their
objectives
house.
in their house. And they get into the market. Sometimes they win, sometimes they lose. But over time, it's been about risk management. And that's the sort of story we want to show Kenyans, that it is possible for you to succeed. However, you must hone your craft. It is not something that you would make money overnight. No, it takes
Do they
time.
make money, by the way?
They do. They actually do.
Do they ban it as well?
They have good days and they have bad days, but they have more good days, to be honest, than bad days, because they've learned how to manage what they're willing to lose. It's about knowing, I'm comfortable to lose only 10,000 shillings. When it gets to 8,000 shillings, they switch off the trading platform, and then they go back and do a review and say, okay, what did we do wrong? How can we learn? What did the charts tell us? What did the markets tell us? That is the process of becoming an experienced trader.
Well, look here, before we throw you off balance, with husbands and wives, discussing strategies of making money, over a 4 o'clock cup of tea in their house. It sounds interesting, yeah? And you wonder, how can we make this? But the question that we have for you on the table is, what should the government do to lower the current wage bill? This coming on the back of the current wage bill conference, which has been taking place at the Kenyatta International Convention Center, where discussants, are floating various proposals, on how to bring this down from the current 48.7% of the GDP to about 35% as prescribed under the Public Finance Act. That is the question they are all battling. Let's hope that they will come up with a response to that. Let's get back to this interesting topic of discussing Forex report in your sitting room. Yeah. Kimari,
Yes.
tell me this. Have you seen people blowing up their wealth through Forex trading?
Sure, I have seen that. I have seen people losing I wouldn't say their net worth, but I would say the money that they put in into trading. I have
The
seen
investment.
That. Yes, the investment. And that is purely out of mismanagement of funds. Remember, this is speculative investments, and you have to have a plan. You have to have a plan of action. Just like Kevin was saying, that you need to understand the market, you need to understand what you're doing, what your goals are, your objectives, and how you're going to manage your risks in order for you to be able to achieve those objectives. So when most people start their journey in Forex trading, usually you will hear that they ended up losing a sizable amount of the investment. And that is part of the learning curve. Now, it is best when you do this with the virtual accounts, and as scope markets, they do provide those virtual accounts so that you understand risk management without losing your actual investment. So that by the time you get to put in your investment, your real money in that, you're not going to end up losing it. And trading is part of taking profits and losses along the way. The goal and the objective in trading is to lose less and to make more.
To make more.
Yes.
And that is the motto of any business, that you get into. Help me understand, or help us understand, the thin line between gambling, Forex trading, and stock trading.
All right. When it comes to gambling, I would say that the game is fixed, and it's fixed against you. The game is fixed? The game is fixed against you, and here is why the game is fixed against you when it comes to gambling. When you look at most gambling platforms, there's a particular ratio that we look at in the financial markets, and it's called the risk to reward ratio. In most avenues for gambling, you are unable to control that. You're unable to control how much you're going to lose and how much you're going to get from that trade or whatever it is that you're doing. That is typically fixed for you. But when it comes to Forex trading and also stock trading, you are the one to decide how much you're going to lose if things go wrong, and also how much you're going to make. So for example, I can decide to cut off my losses at $20 for my trade. And when I'm correct, I can decide to take a profit at $80. So in that case, even if I end up losing twice, that is still less than one profit that I have made of $80. But when it comes to gambling, that tends to be fixed for you. So in the long run, you're more like you're losing your money in the long run.
Just hold on to those thoughts there. We'll be coming back, and we'll continue from where you're living. Yes. Also, I would want to have your views on that. But let's now talk about cybersecurity and the digital space, which is also expanding pretty fast. And the question is, what do we need to do to stay ahead of cyberbullies and cyber criminals? A discussion is currently underway at the Capital Club here in Westlands. And now we want to link up with our reporter, Brian Itava, who has been listening through. He's now about to update us on what has been agreed and what has not been agreed.
Thank you so much, O'Brien. Indeed, it's a very good morning, and we are coming to you live from Capital Club here in Westlands. And a few minutes ago, we were sitting in this conference hall, and we were joined by, we came to attend this event organized by Ernst & Young, which is an audit firm here in Kenya. And they were discussing, or they were releasing the report of the global cybersecurity, the state, and just with respect, and where Kenya is at with respect to cybersecurity. As you know, on the 8th of November this month, the Ministry of ICT just enacted the Data Protection Act, and it went live on the 25th, just 3 days ago. And what is emerging is the cyber security threats are emanating from simple data protection hygiene, such as admin credential and etc. And I'm joined by Anthony Mudusi, who is advisory leader.
No, Anthony Muyuro.
Anthony Muyuro.
Yes, cybersecurity leader.
Cybersecurity leader at EY. Thank you so much for your time and speaking with Channel One. Well, tell us, what is the state of cybersecurity in Kenya, and what is the sector that is greatly affected?
All right. So the sector that actually the conversation today was more focused on the financial services sector, which always happens to be the hotspot for some of the cyber attacks and criminals and other bad actors and syndicates. So ideally, the mechanics there, of course, the economics of a bank or a SACCO they are very cash intensive. So for them, their business inherently is exposed to that risk. So the state of our industry and the market today is that yes, from our report, we're able to unravel some findings in terms of we lack a bit of budgets and investments in some of the capabilities that can actually help organizations just to be able to secure themselves, right? And when you're looking at what kind of security do they need to have in place, we are able now to define it in terms of starting from the basics, because when a cyber attack actually happens, it means that there's a gap somewhere. There is a vulnerability somewhere. So organizations now have to actually make sure, number one, at the very basics, they need to get hygiene right. They need to make sure that all the controls that are supposed to be in place are actually effective. And they also need to now make sure that they invest in the right solutions, which is technology. They underpin it with the right processes, and also they match it with the right people, because skills is actually a very critical component of that equation. In our research today, we noticed that most organizations actually have a skills shortage, and that is a global problem. From a cybersecurity perspective, having the right people that are able now to help an organization secure themselves. So those are some of the findings that we've been able now to bring out, and the key summary takeaways are, number one, investments have to be made more proactively as opposed to reactively, and also skills have to be built organically in an organization, and the right processes and technologies have to be put in place.
Well, I know in your research you talked to a lot of organizations, and what was the most underlining challenge that faces organization in terms when they are trying to embrace cybersecurity and to put more focus and efforts in it?
I think number one is culture. Yeah, culture even from the very top. Like I said, a lot of issues around cybersecurity are now perceived to be, an afterthought. It's not being done by design from the very onset. For instance, you have a team that's working on a very good application, but they do not vision out what are some of the key security requirements. So there's going to be a rush just to get something running, but security has not really been thought out. The other thing is actually, like I mentioned, in terms of the skills and the ability to clearly articulate what are some of these things that we need to have effectively. And lastly is actually maturity. Yeah, a lot of organizations are actually below the right levels of maturity from a process perspective and some of the capabilities that they actually need to have in place. For instance, the inability of an organization to monitor the environment already exposes them because they will never know if they have a cyber attack. So those are some of the issues that we are trying to look at in terms of what is the direction that organizations should take to make sure that cybersecurity is enshrined even at their strategy and that it is it's approached from a strategic perspective and leadership is actually supporting it, and also what are some of the areas that they actually need to build competency to be able now to deliver this effectively.
Well, in our previous research, it is attributing to our previous research, Kenya lost at least 29 billion shillings, 29 billion shillings as a result of more than 10 million threats of cybersecurity. I wonder in your research if you considered to find the amount of money which has been lost in cybersecurity threats.
All right, and that's a good question because in our research this year we did not focus on to quantify how much has been lost because we were having a global view at it and just looking at different markets. However, the key underpinning principles were around budget and leadership, looking at even maturity of capabilities and even skills and capacity to be able now to drive this. But right now we'd be talking, and rightfully like you've mentioned, the direct cost, the money that is actually lost, and the indirect cost of cybercrime, which is now the kind of things that you now need to get in place, like the kind of solutions that you need to get in place, the kind of incident response mechanism. It costs money. So such are some of the costs that are associated with some of these cyber exposures.
Well, in the interest of time, maybe just tell us some of your recommendations.
Right.
What are your main recommendations?
So clearly, as organizations are looking at digital transformation, they also need to look at how do you enable trust by making sure that security is actually inbuilt from the very onset. The other thing that we look at is, can cybersecurity become a strategic enabler for the business to enable growth? Yes, because you're looking at a day and age that you don't go to banks, branches every now and then, but you use the digital channels. But the ability for consumers to trust the digital channels is actually the underlying factor there is how secure are these channels. So what we are saying is that we need to enable trust by making sure that we get the basics right and we optimize and grow cybersecurity and make it an enabler for growth.
All right, thank you so much, Anthony, for
Yes,
speaking
thank you very
with
much.
us.
All right.
You are
Thank
welcome to speak to us again.
Sure.
Well, O'Brien, as you have heard from Anthony, that cybersecurity is one of the most emotive issues that we currently have in Kenya, even as the ministry has just enacted the Data Protection Act. Now, it is a wake-up call to organizations to ensure that they prioritize data protection as one of the company's main business strategies. Well, back to you, O'Brien.
Well, Brian, thank you. You're in Westlands. Have a good time down there. And the discussion there was about, how to secure data, bearing in mind that, there's so much data about you and about me as well, out here. For example, let me ask you this question. I mean, every time you go into, let's say, maybe a shopping mall, or maybe into an institution, you write your name, your ID number, your telephone number, you sign in the time you go in and the time you go out. Do you ever try to find out where that information goes or who end up with that information, and what do they do with this information, which is very critical for you. You have your ID number there, you have your telephone number there, you have your name there, and you have signed. Who ends up with this report? These are some of the issues, that the country is having discussions around. And also remember, sometimes early this year, during the Huduma number registration, millions of people gave out their personal details. Who is holding that information? What are they doing with that information? How will that information be used? Those are some of the issues, that are coming up, and that's why the data protection law is urgently needed, to be reviewed and to be enhanced as we move on. And also remember, in August, we carried the national census. Yeah, the reports came out that we are 47.6 million people, but the data that was captured was more than that. How many people you have in your house, how many laptops you have, all this information. And that's why, as we move towards the era of big data, the question of data protection is becoming critical every day. And these days, the whole world knows for sure that data is the new oil. Who has the data has the wealth. Well, let's come back here, because we're also discussing wealth, by the way, and the discussion is revolving around Forex trading. Number one, we have rebuffed this notion that you can be a millionaire overnight. Yeah, there is possibility, in that, but it's hard, as Kimari tried to explain. It takes patience, for you to get to that point, and it takes some skills, for you to become an established trader. Those are some of the take homes, that we are still discussing here. We were discussing, before we went for the break, we were talking about, the difference between gambling, Forex trading, and stock trading. You were at gambling?
Yes.
Was that your last point?
Yes.
Do you want to pick it up from there?
Yeah, sure. So I was just describing the reasons why Forex is not gambling, and it's mostly due to risk management. When it comes to gambling, pretty much the game is set against you when it comes to risk. You're not able to determine how much you're going to lose versus how much you're willing to make. You find that in most cases, when you're correct, you make less. When you're wrong, you lose more. But in Forex, you can be able to set it in such a way that when you're wrong, you lose less. When you're correct, you make more. And that is basically how we ensure profitability. Always ensure that you make more than you lose. Then now comparing Forex and stocks. When it comes to stocks, it's not just about speculative trading where you buy and sell the stocks you buy and sell shares for profit. You can also invest in the share, and in that case, it means that you're going to be earning dividends. So that is the main difference between stocks and Forex, is that in shares, you can also hold on to the asset and earn dividends from it, but in Forex, it's purely speculation.
It's purely speculation.
Yes.
Do you have a different?
He's captured it quite succinctly. I think also what you need to understand with Forex is also about pricing in expectations. Gambling, you cannot price in expectation. You can only price in probability. With Forex, you take a view and you say, the markets are saying this. This is the view we believe. Okay, so you have ability to take a view on a certain matter. Say, for example, you listen to Trump, and he's got something to say about the China trade war. You have ability to disseminate and understand that information and say, okay, what does this mean for the Forex market? Do I think the dollar is going to go up, or do I think it's going to go down? Now, with gambling, it's completely different. So that's why you see the big differences on that, just to add to what Gilbert has said. Yeah.
Do you engage in Forex trading yourself?
Yes, I do. Yes, but I'm a bit busy and I don't do it so actively because I'm running the business, but I do have a portfolio that I run. So I usually identify opportunities, specifically in commodities. So I like to trade news that is has geopolitics in it. So I typically like to get in when there is, say, for example, a tension in Iran, or there is tension in Russia, for example. I typically look for those opportunities. Yes.
So you stopped being an active trader?
Yes, I've been a trader for 17 years now. 17 years, yes.
Wow,
yes.
that's a long time.
Yes,
So
yes.
you've made your money.
Well,
Or you
yes.
continue to make your money. But by the way, he's in the same business with Donald Trump. Yes, the American president and billionaire property or real estate billionaire. He's also into Forex trading. Yeah, and one thing that's is very critical, for this world of Forex trading. They always track what Donald Trump would say because it moves the market.
Correct.
Is that true?
100%. 100%. So
So do you rejoice when Trump is tweeting at 2 a.m. in the morning?
You rejoice if he says something that, okay, so it's two parts. It's how unpredictable he is, which is good, because if you study his psyche, if you study what his objective is, I actually find him very interesting in the sense that he doesn't do things just out of, it may look that he's doing things out of ordinary, but he's very calculated. So if you're able to tune into that, there's a lot of opportunities in that. At 2 a.m., yes, because it affects your market, it affects your position, it affects what your view is. So you may be believing that the US is about to go into a recession, but he says something that, say for example, gives a boost to the US economy. So that changes your strategy. So I like it because he's unpredictable, and that's good for the markets. I also think that it's a different way. He's completely changed how markets trade. We never had waiting to hear what Trump will do. I mean, I think he does something like 50 or 60 tweets a day. So we've never had that. It's a complete new paradigm in trading. I never had it for 17 years. We used to wait for...
You didn't have one person,
No,
making statements and the market would change.
And the market would change. The closest to that was maybe the Federal Reserve President when he's announcing Alan Greenspan. When that was the closest we had, but not somebody who does it real time and the markets react real time.
And critics of Trump, have started to argue that sometimes Trump is tweeting to make money.
There's a possibility.
When he wakes up, at 2 a.m. and throw, a tweet like record profits for S&P and 500.
Correct.
Is he doing this, to make money, honestly, or he's genuinely, raising issues?
I think there are two parts to it. One, there could be a possibility that he's making money, but I think also it's political rhetoric. He needs to agitate what I call his base, the conservatives, the ones in rural America. They like to hear those good news. They like to hear hope. They like to hear things that are working, that he's done this, he's sorting out the wall, he's that. So he does those things, in my view, more so for political rhetoric as opposed for commercial benefit. Yeah.
Kimari, tell me this, and still staying with Trump and how he has mastered the art of moving markets. Yeah. So when you're training your students, do you also tell them to factor in what's happening with Trump?
Yes, correct to do that. Actually, it's a unit of our training called Fundamental Analysis, where we look at geopolitics and macroeconomics. So that falls into the category of geopolitics. And often we've joked about Trump being a Forex trader, even if there's no conclusive evidence.
Yeah.
But we've always joked about that, and I believe the first 6 months of his presidency was quite unique for Forex traders because we were not used to that kind of presidency. A president who tweets things that can actually move the markets. And also, just to add on to what Kevin had said, if you look at Trump and the people who elected him, the Republicans, these are people who are titans of industry. And in that case, when he tweets some of these things, it's because it's good for Wall Street. And what's good for Wall Street is also good for the economy. So that's the reason why we've seen the stock markets rise. I think they're at the highest level this year. They surpassed the high of last year. That's like the S&P 500. So we can say that it's just for political marks, not really for that he's an actual trader, though I do believe that he might,
He's a small trading account.
Yes.
Like,
Does
for
have
example,
something
I
in
mean,
there.
yesterday, he was on Twitter again, saying, new stock market record today again. Congratulations, USA. How do the markets react?
Well, I would say that it is, yes, positive. Being able to see the stock markets rise, that is a gauge of good economic health. But as we know that Europe is not doing so well, in fact, some countries have slipped back into a recession. So we do expect within the next few years to also see some problems in the US market. But for right now, it's a bullish trend. Things are good. So the markets are responding well. Yeah.
As traders, Kevin, do you love how Trump moves the market?
Absolutely.
You love it.
Absolutely.
So you're looking forward for his re-election?
Well, I think two things. One, I'm not looking forward to his re-election because I think there's going to be quite a bit of the tempo of the U.S. election will be very high, with especially what's going on with the impeachment proceedings. I think that has created a wider split between the left and the right, the conservatives and the Democrats, because I think the election in 2020 will not be about economic issues. It will be about positioning. And maybe they do need also a Building Bridges initiative to bring them back together, because they have not, this is the widest America has been. America is split, and it is now beyond even economic. It is now, I hate you because you're a Republic. It's become very, very that. So I
There's
think
a political divide.
there's a very, very big political
There's
divide.
race divide.
There's race
division. There is a political division. There is economic division.
Yeah.
There is what else?
Yes, I mean, it's got to a point where I think it's concerning, because US is 24% of the global GDP. We are stakeholders, unfortunately to say, we are stakeholders in that economy, because if the US economy gets a sneeze, Kenya will get pneumonia. So,
somebody may be wondering, I mean, why on earth are they discussing Donald Trump and the US economy? Yet they are supposed to be discussing Forex trade. Yeah, there is a correlation between the three. As he has put it, the US controls about 24% of the world economy. It holds the biggest, the US currency, the US dollar, is the global anchor currency in the world. It is the most, it's the highly traded currency in the world. And so Donald Trump is the president of the US, and so whatever he says, has an impact not only on the American economy, but the global economy. And the movements of the global economy affect the Forex market. So there is a correlation. We are not lost. We are still on the lane. But let's now get back to, a more direct issue or question on Forex trading. And I want to hear this from you. Kimari, first of all, do you trade in Forex?
Yes, I do.
Do you make money?
Yes, I do. And the goal has been to always maintain that consistency. I remember when I started out, it was quite rocky. I've been a trader for about 10 years now.
10 years?
Yes.
Wow.
So I started when I was in college. I was just looking for something that I could do that was online. I did see the revolution of the internet at that time, and I knew that the internet is the future. So I was trying to find something that I could do from the internet. And I remember my first year was quite difficult, because there wasn't a lot of access to information back then like there is right now. Right now you have companies like our school and also like Scope Markets who do offer that tutorship and training so that people can be able to know what they're doing. So yes, it has been a journey for me for 10 years.
You started trading with how much?
I started with $1,000.
And wow, that's a lot of money back then.
Yes, it was a lot of
today,
money.
That's about 100,000 shillings today.
Yes, yes. So that was a lot of money. At that time, it was about 70-something,
78.
Around 74, 75,000 shillings. And yes, so that was my entry into the Forex market. It was difficult, but over time I was able to...
Did you burn the whole investment?
Yes, for my first year I did. I did actually.
You burned A whole 78,000 shillings.
Yes, but I was
10 years
able,
ago, that was in 2009.
yes, but I was
And
able
back
to
when you were a
recover.
student.
Yes, but I was able
Whose
to
money
recover
was
that.
this?
It was my own. It was my own money. It wasn't anyone else's money.
This was not part of the school fees?
No. Yeah, that was mine.
Okay.
Yes, but I was
so how
able
did
to
you
recover
pick up
that.
from there?
I had to reach out to someone who was senior than me in the industry, and they were able to mentor me, to teach me what I should do right, what I was doing wrong, and what I should do right. And come 2010, I was able to recover that money, and I was able to move beyond that.
How did you recover? I mean, you have banked your $100, $1,000, or did you lose the entire amount, or
I
you lost part of it?
What I would say is it was almost all of it, because I was
Almost all
only
of it.
left with like about 5%
So,
of the investment.
5%?
Yes, so I had to reinvest. And that was again due to bad risk management. Of course, I was young, and I was looking to get...
would be about
That was just about almost 4,000 shillings. Yes.
Oh, dear.
Yes. And
so you picked up, it was a journey. I mean,
Yes.
for you starting, from about $5, and growing that portfolio.
I had to reinvest. I reinvested about 30,000 shillings. And with that, it took me about 2 years to be able to make more than 200,000 shillings. So I was
2 years
able-
to make?
Yes.
Wow.
So I surpassed the 100,000 shillings, and I moved on. And ever since, I've just been continuously growing my capital.
And since then, it has always been merry.
I have not lost my money. Let's just put it that way. When you lose it
haven't
once,
lost your money.
yes, you make sure that you never lose it again. Yes.
Well, we are in Nairobi. You definitely know this for sure. And the discussion today is about Forex trading. We are in the company of two gentlemen. One of them has about 10 years of experience. Another one has 17 years. So cumulatively, we are talking about 27 years of Forex trading. Wow, that's a long time, definitely. And so you definitely agree with me that, the expertise and the experience we have in studio is unrivaled. 27 years, cumulatively of Forex trading, that's what you call mouth-watering.